Oil prices are plunging this morning, and United States stock futures are rallying as the pause in fighting between the United States and Iran reduces immediate inflation fears. This is the pre-market update for Monday, July 27th, 2026, updated at 8:06 Eastern Time. The overall market bias is cautiously bullish. S&P 500 futures are higher by approximately 0.95%. Dow futures are up 1.12%. Nasdaq 100 futures are leading the market, rising 1.52%. Russell 2000 futures are up approximately 1.4%. The strongest driver is the pause in attacks between the United States and Iran. Brent crude has fallen nearly 8% to around $89 per barrel. West Texas Intermediate is down more than 5% near $84. Lower oil reduces immediate inflation pressure and is helping Treasury yields move lower. It is also supporting airlines, cruise operators, consumer stocks, and high-growth technology companies. United Airlines is up more than 4%. Southwest Airlines is up approximately 3.6%. American Airlines is also higher. Energy producers are moving in the opposite direction. Occidental Petroleum, ConocoPhillips, Devon Energy, and other oil companies are down more than 3%. The geopolitical risk has not disappeared. Shipping through the Strait of Hormuz remains constrained, and attacks affecting other energy routes continue. A breakdown in the temporary pause could reverse the entire morning move. The second major driver is the Federal Reserve. The Fed announces its policy decision Wednesday. Markets are pricing roughly a 31% chance of a quarter-point rate increase this week. That probability declined as oil prices fell, but this is still one of the most uncertain Fed meetings in recent months. The third major driver is big tech earnings. Microsoft, Meta, Amazon, and Apple report this week. Investors will focus on artificial intelligence revenue, cloud demand, capital spending, margins, and free cash flow. Last week's reactions to Alphabet and Tesla showed that investors are no longer rewarding AI spending automatically. Companies must demonstrate that infrastructure investment is producing measurable revenue and profit. The economic calendar begins at 8:30 Eastern Time. June durable goods orders are expected to rise 1.6% after falling 4.5% previously. Core durable goods orders are expected to increase 0.9%. A stronger report could push Treasury yields higher and reduce some of the technology rally. A weak report could create concerns about business investment and growth. The Dallas Fed Manufacturing Survey follows at 10:30 Eastern Time. Treasury auctions later today may also affect interest rates. Baker Hughes is one of today's key earnings movers. The company reported adjusted earnings of 64 cents per share, above the 49 cents expected. Revenue reached $6.74 billion, also above estimates. Baker Hughes shares are up almost 4% despite the sharp decline in oil. That stock-specific strength makes it an important earnings setup. AstraZeneca reported core earnings of $2.63 per share. Revenue reached $15.38 billion. Oncology revenue increased 15%, and the company reaffirmed its full-year outlook. The cross-market signals are supportive. The 10-year Treasury yield has declined to approximately 4.64%. The VIX is down to 17.59. The dollar is weaker. Gold is up around 1%, near $4,093 an ounce. Bitcoin has risen approximately 1.1% to around $65,300. In artificial intelligence and semiconductors, AMD is up more than 2%. Micron is up around 2%. Marvel is higher by almost 3%. Supermicrocomputer is up more than 2%. Nvidia is modestly higher. The bullish semiconductor ETF SOXL is up approximately 6.5% before the bell. Traders should remember that leveraged ETFs reset daily and can suffer major losses if the opening rally reverses. Three stocks deserve the closest attention. The first is United Airlines. It is a direct beneficiary of lower fuel prices and has a clear macroeconomic catalyst. The second is Baker Hughes. Its earnings beat is supporting the stock even though the broader energy sector is falling. The third is AMD. It is one of the strongest liquid AI and semiconductor names in the morning rebound. The biggest market risk is a breakdown in the temporary U.S.-Iran pause that sends oil and Treasury yields higher. The strongest positive catalyst is the sharp fall in oil and the resulting reduction in inflation pressure. The opening strategy is to wait for the durable goods report, mark the pre-market high and low, and let the first 5 to 15 minutes establish direction. Require confirming volume. Use smaller positions around large gaps, and define the stop, target, and maximum daily loss before entering. This is market before the bell. Trade with a plan, control your risk, and never chase the opening move.